Hello, everyone. Welcome to Options with Doug, streaming live on Monday, Wednesday, and Friday at 1:30 p.m. Eastern Time on Bookmap Discord and the Bookmap YouTube channel. Before I get started, I need to go through the disclosures. General disclosure: all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and options involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's my contact information. The best way to get in touch with me is through Discord. My name on Discord is Doug P. Also in Bookmap Discord, there's an Options-Doug chat channel. That's a great place to post questions, comments, and content related to the topics of my presentation and the topic to the channel that I'll go through in just a moment. I'm also on X. My name there is @Pless. Here are the key tenets to my approach for trading. I believe that options trades and market maker hedging activity are key drivers of price in many stocks and futures, and certainly in the large cap tech stocks that I follow and trade, as well as the equity index futures like the S&P 500 and the NASDAQ 100. And for the S&P 500, SPX is the underlying index, SPY is the ETF version of that index, and the ES futures contract is a derivative of SPX. And when traders buy and sell puts and calls in SPX and SPY, market makers take the opposite side of those trades and they hedge their delta exposure with ES futures. And for the NASDAQ 100, NDX is the underlying index. QQQ is the much more liquid ETF version of that index. And when traders buy and sell puts and calls, NQ, the NQ futures contract is a derivative of NDX. And when the traders buy and sell puts and calls in NDX and QQQ, market makers take the opposite side of those trades and they hedge their delta exposure with NQ futures. Here's the focus of my presentation today. First, options, then order flow, then I'll go over the the focus is also on the impact of options markets on stocks and futures, and finally on the influence of market maker hedging flow on price action. I have a two-step process for trading. The first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as a directional bias. And the second step in my process is execution. I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis and for setups. And when I talk about setups today, I will be focusing on an underlying asset, and setups in that asset can be taken with futures contracts, shares of stock, or options, depending on the asset as well as the way you like to trade. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel as well as the chat and YouTube for your questions or comments. Please feel free to post. I'll do my best to answer your questions. And just a couple of quick announcements. On Friday, there was an issue with the YouTube stream that has been resolved today. Also, the recording from Friday, I did record that, and that has been posted to YouTube. So again, YouTube working today. The recording for the Friday session is posted on YouTube. Thank you very much, Dan. And Hector, welcome, glad you're here. Stephen, hello, welcome, glad you're here as well. All right, here's my agenda for today, Monday, August 19th. First of all, I want to go over news items, economic data, and events for the week. Then I'll go through my positional analysis. Then I'll review some setups from earlier today. And then I'll take a look at the live market. And when I get to the live market, if anyone has any stocks they want me to take a look at, please let me know, and I'll be glad to do that. All right, let's start with news items for the week. All right, this is the Spotgamma dashboard, home screen. As far as economic data goes this week and events, it's pretty light, but there's some key events. And of course, the high impact events this week are focused entirely on the Fed. So starting on Wednesday, the FOMC minutes are released at 2 p.m. That's right in the middle of my session. I'll stop whatever I'm doing. We'll watch the market to see the reaction to the FOMC minutes. Also, that's when the Jackson Hole Symposium begins. So I think it does begin on Wednesday. This is showing on Thursday. At any rate, the big event for the symposium is Jerome Powell's speech at 10 a.m. on Friday. There are some news items coming out during the week that are typically low impact on Thursday. 9:45 S&P Global PMI data. Normally it's ISM PMI data that moves the market. So just something to be aware of. All right, so the week, light week, but focused entirely on the Fed. FOMC minutes on Wednesday, and Jerome Powell speaks at the Jackson Hole Symposium on Friday at 10 a.m. All right, so that again is news for the week. Let's move on to positional analysis. I'm going to start with the S&P 500. This is the ES Futures and Bookmap. And before I take a closer look at this, I do want to take a look at a higher time frame. I'm going to go to the SPX, the underlying index. This is a one-day chart in Thinkorswim. We've all seen this chart. I'll point this out quickly. Big rally began last year. Correction this year began on April 1st. Rally resumed the Monday after the April options expiration. The next correction began on Wednesday, July 17th. That was VIX expiration. And now the rally continues. We'll take a closer look at this on a 1-hour chart. All right, so that is a one-day chart. Looks like the correction began on the 17th. Now moving higher. Rally resumed. All right, so here's the Wednesday. Wednesday, July 17th, 3 days before the July options expiration. Correction began. This was the low 2 weeks ago at 51.19. I did talk about that on that Monday. That was the very bottom of the gamma curve. I talked about that where market makers are fully hedged. Move up, pull back to the 5,200 put wall at the time. That was the 5,200 put wall. Jobless claims came out slightly better than expected, and the rally off the jobless claims now continues as apparently inflation and economic data is supporting the market. Note on Friday, market makers' position on the gamma curve did shift to positive, shifted slightly down to expiration today. We'll talk about that in just a minute. So nice steady trend up after that pull back to 5,200. All right, let's take a look at the levels on this chart. First of all, let's take a look at the expected moves. The dashed purple lines are showing the lower and upper weekly expected move. That's based on the options market, based on the closing price for SPX from last Friday. The dashed blue lines are showing the lower and upper daily expected move, also based on the options market, based on the closing price for SPX from last Friday. It looks like SPX is trading up at that upper daily expected move right now. And I do post those levels in Discord every day the day before. All right, those are the expected moves. Now let's take a look at the Spotgamma levels. These are levels that are provided to Spotgamma subscribers. They're based on gamma-weighted open interest. I'm going to point out the key daily levels. And remember, again, Friday was the options expiration, call-dominated options expiration. And typically there can be some movement of levels after expiration. It typically takes several days for the levels to stabilize. In the case for today, for SPX, there were no shifts in levels. So the key daily levels remain unchanged from Friday. So I'm going to point out the key daily levels. First of all, the put wall at 5,300. That's a strike with the largest net negative gamma that can be expected to act as support. Not in play for today. The next level up is the volatility trigger at 54.95. That is Spotgamma's proprietary volatility and gamma flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure, and that tends to enhance or increase volatility. And that was pretty much the situation from this $7.17 correction up until last Friday, when the market finally shifted into firmly positive gamma territory. Again, some of that gamma has now gone due to the expiration, the call-dominated expiration. All right, the next level up is the absolute gamma strike at 55.50. That's an important level. I'll talk about that more when we take a look at the 1-minute chart. So that is 55.50 is the absolute gamma strike. That's a strike with the largest absolute positive and negative gamma. And then finally, the call wall is up at 5,600. That's a strike with the largest net positive gamma that can be expected to act as resistance. And that level is clearly in the crosshairs of SPX. The next major Spotgamma level up above. All right, let's wrap up our view of SPX with a 1-minute chart. This is showing 3 days worth of data, regular trading hours in the dark shaded portions. Here's the volatility trigger, 54.95. SPX trading well above that level. And gamma notional at the beginning of the day for SPX was positive. And if this rally continues, it will be more positive tomorrow. So here's that 55.50 absolute gamma strike. That was a key level on Friday. Around that level, acting as resistance, then support, acting somewhat as a pinning level. Notice how price traded up and down around that level. That again, the absolute gamma strike. And this pinning action can happen in a positive gamma environment around levels of high gamma-weighted open interest. So toward the end of the day, or after, I guess, midday on Friday, 55.50 acting as support, closed just above that level, and then it acted as key support today. That was the entry point for a long today. I'll talk more about that in just a minute. So 55.50 key level for today. Now, SPX stuck at the upper daily expected move, right around 55.85. All right, that's SPX. Let's go take a look at Bookmap now. So in Bookmap, I like to look at SPX and SPY levels, as well as key ES levels. So I do that all with my cloud notes. And let's All right, so I have SPX levels on this chart. There's the 5550. No, the S&P 500 did not quite touch that level. And I think my ES to SPX offset may be a little bit off. That should be a little closer to, it's somewhere between 23 and 24 today. I'm using 23. It looks like it is right around 23.5 today. So there's that 5550 level that I mentioned before. Just above that, that's a SPY level. 554, that's a large gamma 4 level. So I have key SPX levels, SPY levels, also just round number SPY levels. Those are shown with yellow. And then here's the upper daily expected move for ES. I do calculate that separately from the SPX, upper daily expected move. So SPX has traded above its upper daily expected move, but ES has not yet traded above that upper daily expected move. So here's the SPX 5600 call wall, just above that combo 1 level. And then here's the SPY 560 call wall up above. All right, so any questions about any questions about these levels? So SPY levels, SPX levels on this chart, I'm using the offset ES minus SPX of 23. So it looks like right now it's somewhere between 23 and 23 and a half. And I do post those index relationships that I'm using in Discord every day. All right, so key for today, support right around 55.50. We'll talk about that setup in just a few minutes. Then a grind higher. Both the ES and SPX up near their upper daily expected moves for today. All right, let's take a look at NASDAQ. Oh, shifts in levels. Again, SPX. There were no shifts in levels. Levels remain unchanged. Key daily levels remain unchanged from Friday. For SPY, the volatility trigger and call wall both shifted higher. So again, there was that call wall at 560 that did move higher from Friday. So slightly bullish, shifts higher in levels for SPY. And Space Cowboy says, sound on YouTube keeps breaking up. Sorry, Dan, if you're here, I don't know if there's anything that can be done. If somebody else can confirm that on YouTube. And Space Cowboy, if you continue to have issues on YouTube, you're free to join us on Discord. And it looks like Bookmap did post the link for Bookmap Discord, so you can join us there. A little bit better experience on Discord versus YouTube typically. All right. Alois Santa gets it on his side, says it works fine. All right, thank you. Thank you for confirming. All right, let's move on. NASDAQ. Here are the NQ futures and Bookmap. Let's take a quick look at the underlying index charts to see the levels in play. This is QQQ. Here's the volatility trigger at 474. That level did move up from Friday. Absolute gamma strike at 475. That also moved higher. And this is a combo level, 475.5. Acted as resistance earlier today. Price broke above that level. And if you were waiting for a confirmation, that was a good entry point for a short or a pullback to that level. So very important level today, that 475.5. That's a combo 3 level, combining QQQ and NDX gamma weighted open interest into one level. and shown here in terms of price for QQQ. All right, so again, 475.5 resistance, then support. Price continues to move higher. Let's take a look at NDX. And then we'll take a look at the NQ chart. NDX, kind of an odd arrangement of levels for NDX today. That may straighten out in a few days, but the call wall, normally acting as resistance, is kind of in the low end of the range for today at 19,450. That's also the absolute gamma strike. Those levels did move lower from Friday. So for NDX, call wall and absolute gamma strike that had been at 19,650 for some time, both moved down to 450 today. And for NDX, the volatility trigger did move higher. And note the put wall is up at 20,150, and it moved up there on Friday. So put wall is the upper end of the range, call wall lower end of the range for NDX. But that 450 level acting as support today. All right, let's take a look at NQ futures and Bookmap now. All right, key levels. There's that 450 absolute gamma strike call wall acting as support. Just above that is the QQQ 474 volatility trigger. Here's that 475.5 combo 3 level acting as resistance, then support. Let me clear these drawings. Again, I'll talk more about setups in just a few minutes. So final test of the 450 level, breakout above the 475.5 level. And NASDAQ continues to grind higher. So shifts in levels, again, NDX, volatility trigger higher, call wall, absolute gamma strike lower, and both those levels are well below the put wall at 20,150. And for QQQ, the volatility trigger and absolute gamma strike moved higher. So for the S&P 500, SPY 2 levels moved higher, and for QQQ 2 levels moved higher. So slightly bullish based on those shifts in levels. All right, again, we'll take a look at setups in a few minutes. So let's wrap up positional analysis by taking a look at gamma notional. This is market maker's position on the gamma curve at the beginning of the day. This is the data table at the bottom of the Spotgamma AM Founders Note. I look at gamma notional every day. Again, market maker's position on the gamma curve at the beginning of the day for the S&P 500 and the NASDAQ. Note, with the exception of SPY, these numbers are still positive, although all lower from Friday, again due to that call gamma expiring, call dominated expiration on Friday. And that removal of call gamma typically can lead to some consolidation in the market. All right, still slightly positive, more positive for SPX, and really kind of neutral for SPY, NDX, and QQQ. And if the rally continues, looking for gamma notional to start to increase again the next few days. All right, so there's still, I'm not going to take a look at the Vanna model, but there's still a slight put Vanna effect helping to support a rally. according to the Vanna model. I typically like to take a look at the Vanna model and show that to everyone in a very negative gamma environment, which can lead to very large moves. So now, index is trading above the volatility triggers in a positive gamma environment, and I'm typically looking for lower to moderate volatility. Again, a little bit more volatility than Friday based on the drop in gamma notional. And slightly bullish thesis based on the shifts higher in levels in SPY and QQQ. All right, so that is my positional analysis and thesis. All right, so let's move on now to real time, look at some setups. So everything that we've looked at so far, other than Bookmap, is based on static data, updated once a day. Now we're moving on to execution, moving on to real time. I'm going to start with the SP 500. And as usual, I'm going to start by taking a look at what options traders have been doing today. So I'm starting with the SP 500, taking a look at what options traders are doing today. This chart is the HIRO chart, H-I-R-O, Hedging Impact Real-Time Options. It's available to Spotgamma subscribers. What this chart is showing is options trades and market maker hedging activity in real time for a combined signal of SPX, SPY, XSP, and ES futures. There are two lines on this chart. The white line is price for SPX, and the purple line is the HIRO signal. A rising HIRO signal indicates traders are taking positive delta options positions. They're buying calls and or selling puts. And a falling HIRO signal indicates traders are taking negative delta options positions. They're buying puts and or selling calls. All right, that is the index signal. And there are two signals that we can take a look at for the SP 500. Typically, this signal is a little bit more noisy than this signal. This is the equity signal. What this chart is showing is options trades and market maker hedging activity for all 500 stocks in the SP 500 index. All right, I'm going to go back and start with the SP 500 signal, and both the equities and the index signal provided good signals today. So let's start with the index signal. Open it up, full screen. For the equity signal, kind of choppy in the morning, making lower highs. As price approached this level that we expect to act as support. So as price approaches that level, this flow alert comes in, signaling significant options activity. And for the SP 500 especially, these flow alerts can often be a mean reversion signal, signaling a shift in this case from a negative delta flow to a positive delta flow, which happened just a couple minutes later. So price approaching a key support level, flow alert comes in, and as price approaches that level, traders start taking positive delta options positions. So there's the setup in the index signal. Now let's take a look at the equity signal. A little bit more, in this case, a little bit more choppy signal in the morning, but really the same signal. And this was a dual flow alert. I don't think I've ever seen that before. Flow alerts coming in on the index signal and the equity signal at almost the exact same time. Kind of a double flow alert confirmation there, setting up a great long, again right at that 55.50 level. Price reversed higher. All right, so beautiful reversal signal higher for the S&P 500 index signal and the equity signal. Let's go take a look at Bookmap now. Go back to ES. All right, so let's take a look at the order flow in Bookmap now. Let me zoom the chart just a little bit. All right, so we know there are two potential support levels here, especially the 55.50. The volume dots in Bookmap show market buy minus sell. Magenta dots indicate more sellers than buyers. Notice as price moved down, volume dots getting smaller. Sellers are exhausted. Aggressive buyers start to come in, shown by the green volume dots. So again, magenta dots, more sellers than buyers. Magenta dots get smaller. Sellers are exhausted. Aggressive buyers start to come in, shown by the green volume dots, indicating more buyers than sellers. Price starts to move higher as options traders in both the index and equity signal started taking positive delta positions. Price reverses at a key support level. Cumulative volume delta starts to rise, shown by the magenta line there, and also buy stop orders help to fuel the move higher. That's shown by the rising yellow line. All right, so great long setup, very clear. Again, supported by options traders in the index and the equity signal, as well as the order flow here in Bookmap. All right, let me check for questions. And Hector asked on S&P 500 the correct interpretation of that two flow alerts near key gamma strike could be that retail traders are trying to push down price, but market makers entered a switch flow. So my interpretation really is just like I said. So options traders are aware of this 55.50 level. Remember, they're trading options in SPX and SPY. So they are getting out of their short positions, taking long positions, positive delta positions, and market makers, all they're doing, I'm talking about options makers, and all they are doing is responding to retail traders or other traders, options traders. So they are just making markets and hedging their delta exposure. That's all they do. And I don't know why retail traders would be trying to push down price. So that is I would say don't try to read more into this than what I said. So I gave you my complete interpretation. Traders, options traders, see these levels, switch from negative delta to positive delta, either taking profit or entering new positions at a support level, being good options traders. And then aggressive buyers start to come in. Sellers are exhausted. So no more sellers, aggressive buyers come in as traders are taking positive delta positions. Market makers, again, just taking the opposite side of those trades. And they have to, in this case, buy futures and buy stock to hedge their delta exposure. All right, that's the S&P 500. Again, I thought a very clear, easy read for that long setup this morning. Let's take a look at NASDAQ. It was not quite as clear to me. All right, so now to the NQ futures and Bookmap. Let's see what options traders are doing. Close full screen. All right, just like the S&P 500, there are two signals that we can take a look at for NASDAQ. The first is the index signal. What this chart is showing is options trades and market maker hedging activity for a combined signal of NDX and QQQ. So again, when traders buy and sell puts and calls in NDX and QQQ, market makers take the opposite side of those trades and they hedge their delta exposure with NQ futures. And the other signal that we can take a look at for NASDAQ is the MAG 7 signal. Again, just like the S&P 500 equity signal, a little bit choppy in the morning, but the reversal happens right around 10:20, same time. So let's start with the NASDAQ signal. Go to full screen. So in this case, for this signal, the price is shown for NDX. So you can see the 19,450 call wall key gamma strike. Support at that level. Note from the open, this index hero signal had been trending higher. So traders taking positive delta options positions in the index signal, NDX and QQQ from the open. All right, let's go to MAG 7. What this chart is showing is options trades and market maker hedging activity for the stocks known as the Magnificent Seven: Apple, Amazon, Google, Meta, Microsoft, Nvidia, and Tesla. All right, so again, a little bit choppy in the morning, but it reverses right around the same time as everything else. Let's go back to full screen. So again, there's that reversal right at 10:20. Remember that time. We'll see that was important. All right, let's go to NASDAQ now. Zoom in. All right, so let's read the order flow. Again, here are a couple levels that we expect to act as support. The 450 absolute gamma strike call wall and the 474 volatility trigger. NASDAQ does break down. Magenta volume dots get smaller. Sellers are exhausted. Aggressive buyers start to come in. Remember, the index signal for NASDAQ was already trending higher, and the MAG 7 signal starts to reverse higher. So in both signals, traders are taking positive delta options positions. Sellers are exhausted. Buyers come in. Price breaks, finds support, and reverses higher at a key level, and price moves higher. In the subchart, cumulative volume delta rising, that's shown by the blue line there, and the cumulative volume delta does shift colors when it shifts from negative, slightly negative there, magenta, and shifts to dark blue when positive. So aggressive buyers come in and price moves higher, and finally breaks above the right around 1045, 1050 maybe, breaks above that 475.5 combo 3 level that had acted as resistance before. Final consolidation, price breaks higher as traders continue to take positive delta options positions. All right, so that's the NASDAQ and the S&P 500. Both continue to grind higher. Now it looks like ES is trading above its upper daily expected move. All right, let's take a look at some stocks. So remember, again, 1020 reversal higher. Now let's take a look at Apple. So let's see what options traders were doing in Apple this morning. I'm going to shift to puts and calls. Let's go to Apple. All right, what this chart is showing, in the previous charts, I was showing the total signal that combines puts and calls into one signal. That is the purple hero signal. And I can separate out puts and calls. Calls shown with the orange line, puts shown with the blue line. The direction of these lines, again, in terms of delta. So a falling orange line indicates traders are selling calls, and a falling blue line indicates traders are buying puts. And a rising orange line indicates traders are buying calls. So from the open, traders were selling calls and buying puts. It looks like call sellers primarily driving price, selling calls aggressively until, selling calls aggressively until, guess what? 1020. Call sellers take the foot off the gas, indexes reverse higher. All right, so there's Apple. Let's go take a look at Bookmap. Let's zoom in on this move lower. In the subchart, I have two indicators. So I have cumulative volume delta that just comes with Bookmap. I have that for both stocks and futures. And for stocks, I like to look at this market pulse price change indicator that's shown here. And the way I use this is to confirm entry points in a trend. So Apple trading below VWAP, making a series of lower highs and lower lows. So I'm looking for the extremes on this market pulse price change indicator to confirm entry points. And that would be a good rule to follow. Enter short or long if there's an uptrend at the extremes. So for a downtrend, I'm looking at these positive extremes, bright green to confirm a move lower. So price reverses at VWAP, confirmed by this market pulse price change extreme. Here's another entry, confirmed by the market pulse price change extreme. And Apple finds support as call sellers take the foot off the gas right above 223, absorption at that level. Again, as call sellers take the foot off the gas and the indexes resume their start to move higher. All right, so that's Apple. Next stock I want to take a look at is AMD. So AMD in the news this morning with an acquisition. And you can see when this news came out. This is 6 a.m. Trading before the cash open. That's when the news came out. And right at the cash open, AMD moved all the way back down just about to that point where it moved higher at 6 a.m. Zoom in again. All right, let's see what options traders are doing. And note for AMD, 150 is the call wall. So let's go back to Hero now. Go to AMD. A little bit choppy hedging flow, but traders in the morning were selling puts, buying calls, shown by the rising blue and orange lines. Take the foot off the gas as price breaks above the 150 call wall. Price moves down below that level, then starts to move higher again as traders resume selling puts and buying calls. Sorry about all the arrows there. All right, so hope that's clear. From the open, traders selling puts, start buying calls. Price moves above the 150 call wall. Options traders reverse. Price moves back down below the call wall. Options traders start taking positive delta positions again. And finally, find support at the 150 call wall and moves higher until options traders take the foot off the gas just a few minutes later. So mainly calls driving price action, call buyers driving price action for AMD today. Let's go back to Bookmap. There's that final test of the 150 call wall. And both pullback entries here and here confirm with the market pulse price change extremes shown by the bright red for an uptrend. And this is also where AMD breaks above VWAP, shown with the light blue line there. So bullish setup in AMD. All right, let's take a look. Next stock, Coinbase. So I'm going away from the Mag 7 somewhat today, taking a look at several stocks that are not in the Mag 7. All right, the next is Coinbase. Coinbase is a very volatile stock. Can be a little difficult to trade. Let's zoom in on this. All right, so Coinbase in the morning, definitely had a downtrend, making a series of lower highs. Let's see what options traders are doing on Coinbase. Go to Coin. And it's pretty clearly call sellers driving price in Coinbase. You can just quickly look at the notional value. So the blue line, the put line, pretty much flat. Only 924K versus notional value for calls minus 33 million. All right, so call sellers driving price in Coinbase today. Note the flow alert that comes in at the cash open on that initial move higher, signaling a nice reversal in the flow. So you see that flow alert, you see price starting to move lower, orange line starting to move lower, another flow alert. So you're looking for short entries. Let's go back to Bookmap. So that is where this market pulse price change really comes in handy for a stock like Coinbase, very volatile. So there would be the initial short. Flow alert comes in, orange line moving down, traders selling calls. This was actually this pullback, first pullback, not confirmed by an extreme, but a high point in the market pulse price change indicator. Here's the next pullback just above VWAP, just like this one. In this case, it was confirmed with a market pulse price change indicator, which actually came in before the reversal lower. Next pullback confirmed by the market pulse price change indicator. Then more short entries, again confirmed by the market pulse price change indicator. All right, that's Coinbase. Want to take a look at CrowdStrike. Let's zoom in on this. Nice bullish move in CrowdStrike earlier today. Enlarge the volume dots a little bit. All right, let's see what options traders are doing in CrowdStrike today. Zoom in on this. So in the morning, traders were buying calls shown by the rising orange line. Also selling puts initially. Put sellers take the foot off the gas first. Then call buyers. Price starts to move lower, but a nice move up from the open up until about 10:15. That's when call buyers finally took their foot off the gas and started selling puts. All right, let's go to Bookmap. First pullback, deep pullback to VWAP. Start of the trend line confirmed by market pulse price change extreme. Next pullback, not to VWAP. Again, confirmed by market pulse price change extreme. And then the final pullback before CrowdStrike breaks the uptrend with the final market pulse price change indicator extreme. Then then CrowdStrike breaks the trend, starts a downtrend as the options traders have taken the foot off the gas. And again, the market pulse price change in this case confirms a short entry, pullback just to above VWAP and then a break below VWAP, as traders again had stopped taking positive delta positions. And started selling calls. All right, last stock I wanted to take a look at is Meta. Zoom in on this just a little bit. Note the key level in play for Meta today, 530 key gamma strike. Price did briefly break above that level, then broke below. And as it was about ready to break below, the flow alert came in. Actually, it was already a little bit below. All right, so from around 950, traders were selling calls and buying puts. So from here to here, blue line, orange line moving in the same direction, in this case down. That's a very strong directional signal. In this case, it is bearish, as traders were buying puts and selling calls. Let's go take a look at Bookmap. Go to Meta. Zoom in. Trend break. Price can't quite make it back to that 530 key gamma strike. market pulse price change confirmation for short at that point. And then if you want to wait for below VWAP, there's a slight pullback just below VWAP as traders started aggressively buying puts and selling calls. So nice short setup, trend break as options traders start taking negative delta positions and meta moves lower below the 530 key gamma strike. All right, oh boy wants to take a look at Broadcom and Qualcomm. Sure, we can do that. Now, I don't have either of those stocks in Bookmap, but we can take a look in Hero. All right, so let's go with Broadcom first. Bearish morning in Broadcom. Traders selling calls, buying puts, blue line, orange line moving in the same direction down toward the 160 key gamma strike. Looks like price did not quite make it to that level. Reversed higher right around 160.50. Right at 10:20, reversal time. As options traders took their foot off the gas, they started selling puts and buying calls, and price reversed higher, along with the indexes. All right, that is Broadcom. Let's take a look at Qualcomm. Not much in the way of options trades to go with. I'll talk about that vertical line in just a moment. So I wanted to zoom so that was not in the picture. So these numbers pretty small, but both negative. So net for the day. Traders are buying puts and selling calls. Note 170 is the key gamma strike. And price did move below that level earlier today, now moving higher. What this vertical line is right here is this is a large block order, an institutional order that comes in all at once. Some large trader, large institution buying a large block of puts. All right, any other stocks? Let's go back to the indexes. So now we're separated out puts and calls. Looks like call buyers primarily driving the S&P 500 index. Notional value positive 2.26 billion versus notional value for puts minus 702 million. So call buyers driving price in the index signal. Let's check equities. So in the equities, traders are buying calls and selling puts. Let's check NASDAQ, and the S&P 500 continues to grind higher. So NASDAQ, traders are buying calls and selling puts. Notional value is positive for both calls and puts. Mag 7, traders buying calls and selling puts as well. So it looks like for the indexes, call buyers are definitely driving price today for both the S&P 500 and the NASDAQ. Let's go back to Bookmap. Go back to the S&P 500. So ES now grinding higher above its upper daily expected move. Looks like this next level that may be in play. Let's zoom in on this a bit. This is the Spotgamma implied move high. SPX 5591. Let's go back to Hero and we can see that. That would be on this signal. That's this line right here. So SPX still a little bit below that level. And that is based on Spotgamma's gamma-focused calculation. It's a little bit different from the expected move that I calculate, just based purely on the options market. And again, remember, up above 5,600 call wall, there's a combo 1 level just below that, and then the 560 SPY 560 call wall just above. And oh boy, you're welcome. All right, let's wrap this up with a quick view of NASDAQ. Very linear move higher, nice uptrend. NASDAQ NQ heading up towards its upper daily expected move. And then here's the QQQ call wall at 480. Remember, the call wall for NDX acted as support today at 450. All right, so there's the QQQ 480 call wall. Both the S&P 500 and NASDAQ continue to grind higher as traders are buying calls. All right, everyone, my time is up. I want to thank you very much for watching. Remember, on Wednesday, Jackson Hole Symposium begins, I believe, at maybe Thursday. But most importantly for Wednesday, FOMC minutes come out at 2 p.m., and that will be in the middle of my session. We'll talk about it. I'll stop whatever I'm doing, and we'll take a look at the S&P 500 and NASDAQ at that time. All right, thanks everyone. Have a great afternoon, and I will see you on Wednesday. Bye.